Here are the three things that you need to know to start your morning off. The IPO we've all been waiting for is almost here. Chip designer Arm priced its listing at $51 a share at the top end of the range. SoftBank-backed business raised $4.87 billion, giving itself a valuation of around $54.5 billion. The biggest listing of the year is being closely watched as a potential catalyst for others to come to market. In what has been a relatively slow year for public offerings, the demand for this one seems strong. Bloomberg News reporting the IPO was oversubscribed 10x. And the deadline nears. A major auto strike looms as the UAW and Detroit's Big Three fail to agree on a new contract. There's still time to reach an agreement ahead of tonight's midnight deadline. If the unprecedented action does go ahead, then the union will initially strike at a limited number of targeted locations. We'll get into the possible hit to the U.S. economy, which is expected to be in the billions of dollars. And one analyst called it probably the worst wedding to try to do seating for. Tech leaders met in Washington, D.C. for a closed-door Senate meeting looking at how artificial intelligence should be regulated among the delegates. Elon Musk, Mark Zuckerberg, Bill Gates, and OpenAI CEO Sam Altman. Reports suggest there was plenty of disagreement, including around comments from Elon Musk that senators shouldn't be worried about self-driving cars. We'll dive into all of that with the generative AI expert Nina Schiff.
And now let's break down our top three stories of the day and why they matter, talking about the broader implications here. Up first, we got that auto workers and strike that is potentially going to be hitting as of midnight tonight. The UAW revealing its strike strategy. If a deal with the three big automakers is not reached by midnight, could target specific plants. But really, there is the economic impact that we have been talking a lot about. Probably the most cited figure here, the 10-day strike could result in total economic losses of $5.6 billion. That the off-cited Anderson Economic Group. To me, there is also the really interesting moment that we are in for worker power, worker balance of power, the role of unions in America, kind of all of these different threads converging in this story.
There's also a larger, for investors out there, implication as to how this may hit some of the key production or delivery markers that have been baked into guidance and forecasts by these three major automakers as well, especially as all of them had talked about it in some facet or another, at least acknowledging the history of their working with these unions on the earnings calls most recently, and many of them at that point at least expecting it not to get to this type of juncture as well, or have a long extended shutdown. Also, tech titans talking AI, Meta CEO Mark Zuckerberg, Tesla CEO Elon Musk, and former Microsoft CEO Bill Gates all attending a meeting with lawmakers on Wednesday centered around the regulation of AI. Now, this should come as no surprise, as there have been some advanced or at least increasing amounts of discussion taking place within the Beltway. And what should come as a little bit of a surprise, perhaps, is that this was more of a closed-door meeting than we have seen in the past, especially around some cutting-edge technologies that regulators are still trying to wrap their heads around too. Right.
The likes of Senator Elizabeth Warren being critical of this group for doing it in closed doors. But obviously the bigger implications here are relatively obvious. We've been talking about AI all year. You have Elon Musk coming out of that meeting, repeating the threat that he has talked about before from AI to existence, human existence even, civilization even. He says there's a non-zero chance that AI could kill us all. So if that is indeed the stakes here, then the implications of whether to regulate or not, obviously, it's an important question. Yeah. The bigger question also is whether we're going to get it right. We talked to EY's Carmine DeCibio yesterday, and he did not express a terrible amount of optimism that lawmakers here in the U.S. will be able to address this issue effectively.
Yeah, exactly.
All right, and chip designer Arm making its public debut today on the NASDAQ. We've talked a lot about this one as well. The stakes here, what is it going to mean what is it going to signal in terms of the broader IPO market? I think there's a little bit of a debate over whether Arm is really sort of the symbolic IPO or whether some future IPOs are going to be a little bit more typical of demand in this market.
Yeah, and it makes you question, well, if not this one, then which one? Because of the docket right now, we're looking at Birkenstock that we talked about yesterday, and we're looking at Instacart as well, which...
And Klaviyo.
Yes, and Klaviyo. So even with all of that in mind, for the big names, some of the household names that have made it to the public markets this year, Kava, perhaps one of the larger ones that people will recognize from just making some of their lunch runs. This one is not going to be on the docket for discussion at every dinner table across America. However, in much of the lexicon or much of the discussion around where generative AI has its legs and where it has its first perhaps test in the form of a company that touts an ability to very much service this type of industry, but also meet the demand that is coming forth as well. That's where Arm and perhaps the growth prospect that we've seen around the time of IPOs will have a little bit more of that fanfare early on too.